I believe that passively investing in real estate is the single best way to make enough money to do all the things you want to do, create the life that you want for you and your family. Now, let's talk about it. If you've looked at buying or investing in real estate before, there's two ways that people generally raise money to do this. They either do it through a syndication or they do it through a fund manager. Now, we used to syndicate. I'll tell you the difference. Syndicators, it's very simple. They go find the deal, they lock it down, and then they go raise the money. Usually they've got 45 to 60 days to get that deal closed. So it's kind of a fire drill for them. It is sometimes difficult for syndicators to get deals for a couple of reasons. The first is everybody that they're competing with, if you're in a competitive market, they are also syndicators. So they're doing the same thing. Secondly, sellers know the syndicators need to go out still and raise the money. So that just carries with it a higher risk to the seller and to that broker community. They know that there's that potential there that you may not be able to raise the equity to get the deal done. So it's oftentimes syndicators have a little bit more difficulty getting deals. Now, a couple of years ago, and we experienced this personally. So a couple of years ago, we flipped our buying process. We decided we wanted to use funds and become fund managers. So now we flip that model. We raise the equity first. So we're talking about here today. And then we use those commitments to go to the broker community and to the sellers and say, look, folks, we've raised the money already. We want to buy your property. And we come to the market competing with syndicators in a much, much stronger position than we did when we hadn't raised the money in advance. So it just makes sense when you think about it. People with money in hand always gets the best deals. I mean, it's just always the way it is. So that's why we now use the fund model to buy our deals. There's a couple other really good benefits to being in a fund as opposed to a syndication. We already talked about the fact that you're probably going to get better deals. I love the fact that you can put multiple assets inside a fund, and we do that. Our last fund had 3 assets in it. So it gives you some diversification, either geographically or building type or what have you. Generally, the transaction costs are lower with the fund. And that's because when you go out to raise money, you need to spend all the money with the legal fees and everything else to prepare all your documents. Well, you only have to do that once. So you get to spread those costs over several deals instead of just one deal. So I'm able to save on those transaction costs, and that savings accrues directly to the investors. Finally, and a lot of people don't realize this, they think when you make the commitment, the funds have to sit in your bank account until we find the deal, and then we call you and say, okay, we're ready for your money, send your money for that particular deal. That's not really how it works. Most people that are in our funds and make commitments, they keep their money invested until we give them as much notice as we can. Usually it's at least 4 weeks to say, okay, you need to, do whatever it is you need to do to move your funds around to meet the capital call. So the huge benefit is you can keep these funds invested until we call the capital. That's a big deal. All right, so let's talk about, remember I said we've migrated to the fund model. Let me just tell you the term of our current fund so that you understand exactly what it is. So when we underwrite our deals, we're looking for a 15% overall annual return, and that includes a 6% preferred return. So what happens is when we buy a deal, you get a 6% preferred return on the capital that you've invested. We pay that quarterly. And after you get your preferred return and your money back, then we get to the 80-20 split. We typically hold our deals for 3 to 5 years. In a value add business plan, what you don't want to do is go in and add a ton of value, spend a lot of money, and then outlive those improvements. So we like to get in and out within 3 to 5 years. Most of our investors like that because they like to see the funds turn and know that they've actually made money on that deal. They really, really enjoy that. Our minimum investment is $100,000. Our fund is set up for accredited investors only. Our fee structure is generally some of the lowest in the market. We're not here for the fees. I can guarantee you that. We just need some fees to keep the doors open and to continue to do what we do so we can bring incredible investment opportunities to you. But it's a 1% acquisition disposition fee and then an annual asset management fee of 1.5%. So usually the fee structure in this environment is usually 2% and 2% for the asset acquisition fee or asset management fee. So we're below those in both cases. We always buy in growth markets, and right now we're focused in the Southeast. There's a chance that we'll find a deal in the Southwest. We're starting to look there, but we're usually very, very slow and deliberate about what we do and how we do it. For more information about how you can become part of the KRI investor family and start creating massive wealth for yourself, please contact us at 813-489-9666 or visit us at our website at www.kripartners.com.